Hey guys, welcome to our weekly Forex market analysis review for last week, also preview for this week. Now from now on, I'm gonna do two separate video, one for Forex, the other one for real estate. So if you're here for real estate, stay tuned. I'm gonna do that after I finish this video. It's just easier for people to pick what they're interested to watch, basically. Okay, so today I'd like to talk to you about how I actually, what's my routine like, basically, because a lot of people sort of want to know how do you actually trade while having other things to do in life, because it's easier. I shouldn't say easier, but it's easy to imagine if you're a full-time trader, then people think you're in front of a screen all the time. Then you basically have your fingers on the pulse of the market. But what if the people who just slowly learning how to trade the market, how do they incorporate it with their daily lives? So I think I'm gonna teach you a very simple method that I personally use that enable me to still stay in the market, but also have time, energy to do other things. So the way I analyze the market is a very top-down approach. And there's no right or wrong, that's just my personal approach. I like to really look at the microeconomics, what's going on around the world, what's going on globally. And then I'll sort of going down to become the more micro way. Okay, so first thing I do, and everything I show you here will be most likely will be a free things, like a free software. Okay, because I really don't want people to spend money if they don't have to. Okay, so you can see first thing I do is I go to Bloomberg. Okay, I'm sorry, I have to use it for the Instagram IGTV. So I go to Bloomberg.com, market stocks, and then there you can basically have a top-down approach to all the three major market, which is the U.S. equity right here, the European equities. I don't really pay too much attention to the Middle East and Africa. So it's US, Europe, and Asia. Okay, so that's pretty much the three major global equities. And what you want to see is to basically have a big view of what had happened globally. Now, in terms of time zone, let's look at Asian Pacific first, because that's how the time zone works. So I always like to see the change percentage here. Okay, so I completely ignore all the other data, and you should do that too, because what you want to do is just have a very simple glimpse of the market. Okay, so let me show you the screen. Just 1 second. Yep. So again, American. Okay, you go to Bloomberg.com, market stocks first, and American, that's for U.S. equity, Europe, and scroll down to Asia. Okay, so Asia Pacific, look at the percentage change. First, look at Nikkei 225. This represents basically what happened today, or what happened in the previous Asian zone in the Japanese stock market. And then I usually don't look at the Tokyo index. Now, the big things you want to see is a consistent. Okay, so if you have a red, a green, a red, a green, then there's really nothing, there's not a congruent message that we can see, because what we want is all green or all red, at least in terms of a country or a geographic area. So like here today, I see Nikkei is green, Tokyo index is green, and then the Hang Seng index, which is Hong Kong, CSI is Shanghai, and the rest is Asia and Singapore and Malaysia, I believe. And all this, as we can see, the first thing I want to see is the color. Are we all green or are we all red? Second thing is look at the number, because even if you're green or red, if you only have like 0.3, 0.01, 0.1, 0.5, that means it's not too much action today in the market. So when I look at it, I would just say the market is flat. So my market is flat, Asian Pacific. And if I go up to the European market right here, same thing. You can see this Euro stocks, this Eurozone, FTSE is UK, Germany, and France. So you look at the change, it's all red. Now, do we have anything more than 1% change? No. everything is still below 1. So even if it's all red, I would say that, okay, the European market today is not too well, but it's nothing of a panic mode, right? It's just red. It's flat, slightly negative. And then I'll go top to the US equity. Now, usually I only look at this after 5 p.m. Eastern Standard Time, the New York time, because right now it's only, as you can see, right now it's only at 11 o'clock. So market is going to change later on throughout the day. So it's not really an accurate message for now. And this is where you look at the time right here. Okay. So basically, what does that tell me? It tells me what is the sentiment of the global market right now. So if I have something that's congruent, let's say if I have a very negative Asian Pacific, all red, all under or more than negative 1%, same as Europe, same as North American, then I know that the whole global market is in a very negative mode right now. And that is the first thing I look at. And the second thing is, if I have something that's congruent like this, I will also want to check the two other things. Now, the two other things will be the commodity market. Because when you have a generally very negative sentiment in the market, you can for sure know that a safe haven commodity such as gold, because what happened when the market is panicked is that people will want to buy something that's certain, like gold. So one second thing I do is to go to the chart just to look at the gold market or commodity market itself. So there's two things I like to look at. One is the gold market. The other one is the US 10-year Treasury yield. Now, these two are very good criteria for me to see how are the market doing. And I'm running a little bit slow for today's internet. I think it's because it's Monday. Nobody want to work in Monday. So just give me 1 second, see if I can pull it out. So I have 4 charts, commodity daily. I usually go to this one. Let's see. Now, while I'm waiting for this one, another thing what I do is to quickly look at the calendar. Now, as I mentioned before, I love Forex Factory.com calendar, just because I love the view. You know, it's a weekly view, very, very clearly. You can just see what is the data point for this week. Now, one thing to be careful is to not look at the number of the color number in impact, because this, like for example, this red number, yellow number, orange number means that if it's important, very important, or not so important, I completely ignore that one, because as I mentioned before, that whether a catalyst, an event is important or not, is completely has everything to do with the current market. Okay, because let's say right now, if you look at, for example, last week, if you look at the job market, do people look at do people pay more attention to the employment number nowadays, or they pay more attention to the inflation number? Well, that depends, right? Depend on the central bank's direction, depend on what's a hot topic right now. For example, right now in UK, do you think people pay more attention to the interest rate or the employment data? Well, neither, because right now in UK, people only pay attention to the election this week and also the Brexit. So that is the focus of the market right now. So if you trade the British pound and you just keep buying or selling out of the economic data, and sometimes you don't understand, oh, how come the data is so well and yet the British pound tanks? It's because people are not paying attention to the data at this point. People are paying attention to the political movement or progress at the moment. So you have to basically know what is the current direction or focus in the market right now. Okay, so let's go back to this. Oh wow, it's still loading. Really, really slow today. Okay, great. So gold chart daily. I use daily again because this is a top-down approach. I just trying to grasp what happened in the market. If I take a look at gold today, or whenever I have a very strong or weak market, I'll see if gold react to what is supposed to react. Now, mind you, market is very dynamic, so it doesn't work like a science. Like if you say you have a negative, a bearish stock market, the gold price will definitely go up. Not necessary, because you have to dig into it to find out why is the market going up or down. Now, let's just put it simple. If the market is going down because of the panic mood, like people really scared about the future, then yes, we should simultaneously see the gold price goes up. And then that's the second commodity criteria that I look at. And then I look at a U.S. government bond. The bond yield, basically, the treasury bond work exactly as gold. Okay, when people think that the future is very negative, there's no hope, they want to put all their money and assets in something safe, they're either buy gold or they put in the U.S. government. Now, whether you like United States or not, it is still no doubt the strongest and also the safest country in the world. So when you buy the U.S. government bonds, means you're investing in the U.S. government. And if the U.S. government default in the future, that pretty much means that's the end of the world, basically. So it's as good as gold. Now, if you look at this, you have to be careful whether you're looking at the bond price or you're looking at the yield, because the yield goes in opposite direction as the bond price. So if the yield goes down, means today a lot of people are buying US bond, and a lot of people are buying US bond is equal to a lot of people are buying gold. So it's exactly the same thing. But if you look at a chart like this, you'll know that this US bond yield and gold will go in the opposite direction, most likely in a normal situations. Okay, so that's the two things I look at. Once I have a congruent picture, then I will know what is the sentiment of the market. And then I will quickly take a look at the events to see, do we have anything that might cause the market to go up or go down for the day. If I take a look at the event, I realize, okay, I couldn't really see any significant economic events. Then finally, I will go to a news outlet. For me, it is a Forex Live. I really like Forex Live. As I mentioned before, it's free. It gives you the great session wrap like here. So what you can do is you can quickly take a look at what had happened in a previous session to cause the current market movement in the current session. Okay, so that's basically my quick analysis. This whole thing will take me about 5 to 10 minutes only. So whether you do it in the morning or you do it at night, it's really only going to take you 10 minutes. You can do it before you go to work. You can do it after work, before you go to sleep. It really depends on how you trade or what session you want to focus on. But that's pretty much going to take you 10 minutes. In 10 minutes of time, you'll know whether today you have a really easy environment to trade. Now, easy means when everything line up. That means when all the major equities, it's all green or all red in a higher percentage number, and then confirm with the commodity market, the gold price, the US Treasury yield. And then that's a reaction of the market, right? And you are able to find a reason for that, whether it's an economic calendar event or it's a political event. Now, once you have that you'll know, okay, what happened in the market right now? What is the reason behind it? And what are the currencies that most likely to react in this kind of situation? Okay, so let's say if we have a very negative global equity, and then we have a very strong gold price, a very weak treasury yield, that means that most likely, and then the reason, let's say because Trump declared wars to North Korea, so most likely what currency is going to go up? The safe haven currency, and that will be the Japanese yen and Swiss franc. So every currency has its personality, and that's how I basically 10 minutes at your time a day, you can know whether you have a trading opportunity or not. Now, as a swing trader myself, I definitely do not trade every day. I only want to trade when the probability is high. Okay, so basically that's my very simple routine to analyze the market. Now let's talk about what had happened last week. Okay, so last week I took, by the way, if you want to know the daily updates, I would suggest you to go to TradingView, and you can basically look at all the nice ideas that people put on here. It's completely free. Now, TradingView, if you want to use this kind of charting software, it's also free at the beginning, but if you want to, obviously more tools, it's gonna cost you more money. But it's a really, really good place, a good community to look at all these things. Now, I starting post my idea right here as well. Okay. Now I gotta be honest, I just start posting here. I used to just write everything at my Evernote. Okay. This is my workstation, by the way. So I used to put everything just privately, but I realized like, hey, it would be very good for myself to put everything in an online forum so that people can give me some advice. I can look at people's idea, and then we can all communicate, because I understand it's a market. Information is very important, and you want to basically know what are the general idea. And that gives you a lot of confidence too, because if you have a good idea, let's say if you want to buy euro dollar, and you go on this kind of website and you realize a lot of top traders also want to buy euro dollar, then if you click and you look at the reason that they want to buy, if it's congruent with your reason, then that would just make you feel a little bit more confident to get into this kind of trade. Okay, so last week I actually had 2 losses. Okay, and as a trader, I always want to tell people you should trade your loss as much as you trade your win, because losing is the only opportunity you can learn. Okay, when you win, you're not going to go back to learn. So appreciate the losses, and then as long as you follow your risk and reward routine, then losing is part of the game, because nobody has any control of the market. We can only trade with the available information right in front of our eyes. So if you trade something right now and 2 days later there is a big geopolitical event that is completely outside everybody's imagination, then should you beat yourself because you have a loss? No, because how would you know? Nobody has a crystal ball, right? So you wouldn't know what will happen. So this week, last week, first of all, let's talk about what happened globally in microeconomics. So last week, the market was generally, we starting with a sort of a risk on sentiment last week. Now the risk on comes down to, first, the manufacturing data from China was much positive than expected. So that, starting from Sunday last week, caused the market to sort of have a very good mood. But then immediately from Monday, we have a very negative ISM manufacturing PMI from US, as you can see. So that pretty much caused dollar to tank throughout the week. And then you have an Australian cash rate, which is on hold. But what happened here is, whenever you have this kind of central bank statement, you should definitely need to read the statement itself. Now, do I read the statement myself? Honestly, no. For 2 reasons. I tried to do before, or else I actually tried to attend live in those kind of press conference. I used to sign up with a very expensive service to attend those live conferences. But what happened is that everybody has their own interpretations. So what I usually, as a swing trader, what I like to do is I wait after the event at least half hour. And then I go to Forex Live, again, my favorite website, look at the commentators. What do they think about that rate statement? So that will be a much accurate way to trade. Now, you don't need to go to Forex Live. You can go to Bloomberg. You can go to any major outlet, news outlet. Then you can sort of understand what is the general census about this rate statement. So what happened is the statement was neutral. It's not particularly good or bad, but the market or expectation from the economists think that the statement should be very dovish because consider Australian economy and fundamental data were not that good. However, the statement was neutral. So when you have a very pessimistic expectation that matched with a neutral outcome, that equal a positive reaction. So Australian dollar surged up after Monday. So since Monday, we have a very weak dollar, a very strong Australian dollar. However, it quickly reversed. And that's why I'm saying to people, my personal rule of thumb is I never put any trade when I have a consecutive tier 1 data. Because understand, unless you are a very, very short-term trader, otherwise you will very easily to get stop out. You might have a very strong LC because this event today, and have a very weak LC because of the GDP. And that's exactly what happened last week. Now, on Wednesday, we have ADP non-farm employment change. It's not a big deal. This event, although it's red, people don't really pay too much attention. People want to know because once you have an ADP non-farm payroll, that means the real non-farm payroll is coming on Friday, which is 2 days. So people are not going to put a big money and big position in this event. However, because it's a big drop, so what happened is, what is the story in the market right now? A negative US dollar. So this event pushed the dollar further down to the south. Then we have a Bank of Canada rate statement. This rate statement, it works exactly like a Australian dollar, is that even though the rate is on hold, but central bank, the bank statement actually came out a little bit positive than what people had expected. So it's not that it's positive, it's just neutral. But because people have a negative expectation, so when you have a negative expectation with a neutral result, that equal a positive reaction. Okay, vice versa, if you have a positive expectation that meet with a neutral result, that's equal a negative reaction. I know it sounds very tongue twisting, but that's basically how the fundamental market works. It's not only the result, it comes down to 3 steps. First, what is the general expectation? What is the result? And that equal a reaction. So a negative expectation with a negative result means a negative reaction or neutral. A positive expectation meet with a negative or neutral result means a reversal, right? So basically, Canadian dollar went up because of this event. And yet, see, we have another non-manufactured PMI from US, which also, once again, is a negative number. And this pushed dollar further down. And then we have a New Zealand RBNZ data. And basically, the data, see, that's what I'm trying to tell you guys, that this kind of speech sometimes will push the market further than any other fundamental data. Because what happened is it was a quite neutral, positive speech from the central bank governor, and that pushed the New Zealand dollar to the upside. Now, mind you, New Zealand dollar has been the strongest currency from last week, or all the way from previous few weeks. And then look, we have another two negative tier 1 data from Australia. That push completely reversed the Australian dollar. So remember at the beginning, it was a positive market because of Chinese data, a positive Australian dollar, which is great, and then it reversed a little bit, and now by Wednesday, it completely went from a bullish currency to a bearish currency. And that's why I'm saying that if you are a swing trader, you have to be very careful of when do you put into your trade, because unless you are able to be beside the market every time, You do not want to trade in these kind of conditions. And personally, I did not trade in these kind of conditions myself. Although I say I got stop out, that was the trade I put in previously. So I'll talk about more about my personal trade later. Thursday, not much data point. It's a very quiet day, all the way leading to the big events, which is the non-farm payroll last Friday. Now, that's a very interesting thing I want to talk about is because the U.S. non-farm payroll completely shocked the market. As you can see, the expectation and the previous number all lower than the actual number. So it's a very, very strong job market. On top of that, the unemployment rate also dropped to 3.5%. So this headline. Now, although people always say that you have to look at the details such as average earning, that's true. But the headline itself are enough to push the currency market because the currency market is highly speculative. So any sort of wind blowing will push the market strongly to certain directions. So because of that, what happened to the US dollar? It went up. And what did we start the week with the US dollar? A very bearish US dollar. So you see everything was a roller coaster ride this week. A weak US dollar at the beginning of the week end up become the strongest currency. A strongest Australian dollar at the end of the week become the weakest currency. Okay, a strong Canadian dollar on Wednesday. By Friday, look at the job data in Canada, a negative 71,000. That is so bad than the expectation. Unemployment rate even worse. We previously expected at 5.5% and we came out at 5.9. That's unemployment rate. So of course, the lower the better. So it's a very, very negative job market for Canadian. And that means the Canadian dollar also took a roller coaster ride. Okay, so that's why it's very important if you are a swing trader, although this kind of market conditions very exciting, you do not want to trade it because most likely you will get stop out, up and down, up and down. Now, some people might argue, say, oh, but sometimes I put in the trade and then it shoots up. Yes, that's because the result all come out in your direction. But since you are not able to predict the future, how do you know it's going to come up in your direction? Because once you have this kind of result, it will definitely stop you out. Okay, so that's what happened last week in the currency market in terms of the fundamental news. Okay, now let's take a look at my personal trade. So I took a few trades at all stop out. Basically, it was the Aussie CAD trade that's from last week and a euro dollar trade. Where is it? Just give me 1 second. I feel like okay, it's coming out. So this is the Aussie Newsy trade. My Aussie CAD trade. It's not here. Chart 3, chart 1. Yeah, sorry guys, just give me 1 second. Yeah, chart 1 right here. Okay. So Aussie CAD trade is right here. This is the trade I took. Let me zoom in. Let me enlarge the window. Okay. So basically what happened is that the blue line, of course, this is where I enter. That's my stop loss and that's my profit. As you can see, I always like to have a very, very big risk and reward. Just because as a swing trader, you often have to hold trade for a long time. You definitely, for me personally, if I have to do something patiently, of course, I want the result or the fruit to be as big as possible. So what happened is I got whipsawed. Okay, when we saw whipsaw is that you are in the right direction, but technically either your stop loss is too small, too narrow, or the market is just too rattled that stop you out. And I think my stop loss was probably too close. Because you can see the reason I put in here was using a daily PV point. But if right now we are at hourly chart, you can easily tell that it is not really a good point, a stop loss point, because if I had put this line right here, then I would be fine. That's the previous swing point right here. If I have put in here, I'll be fine. But I didn't. I didn't put it in there because I tried to have a nice stop risk and reward ratio. Now, nevertheless, I got stop out, and the reason I already mentioned was because Australian dollar started the week strong, which stopped me out, and then it become weak, and now it becomes strong again. Why? Because we have a very bad Canadian job data. So it's pretty upside down, up and down market, which is perfect for a day trader. If you're a day trader, this is the market you love. If you're a swing trader, this is the market you hate, basically. So I got stop out in this trade last week because of that. Only thing I can say to myself is probably put stop loss point in a much better position next time. And then if I still want to have a good risk reward ratio, I could always move the profit point to a much lower place if it's a short trade, and then just have a more patient. Now euro dollar is even worse for me because it's the same thing. We start the week with a very weak US dollar, ended week with a very strong US dollar. So same thing, exactly same pattern. That's how I got stop out. But it's the worst than Aussie is because it's so close. I could, if I just move a stop loss a little bit safer, we are at 5-minute chart right now. So if I go back to 1 hour. Now the reason I use 5-minute chart is not because I trade a mini time frame. It's just because I use a daily pivot point, and I like to have a better vision when looking at that. So I like to use a 5-minute chart just because I like to see where the pivot point is. So you see, I put stop loss here where I should have put on top of here. If I put on top of here, that will be a much stronger position, a good swing point. But then I wouldn't have a good risk reward ratio, so I will have to move down my profit point. So sometimes it's really a very subjective view, because if I move down my stop point to like 1.08 for euro dollar, now when was the last time that euro is at 1.28? And we can see the last time was back in May. So most likely we do need a very, very big catalyst to push euro down to that point again. And that's why I didn't want to put in there, because I feel like it's probably going to take a month before the target gets hit. So I rather risk getting stop out, but at least also have a higher chance to wrap up this trade. So again, it's a very subjective decision, very personal. It's up to you. But basically, that's how these two trade that was a loss for me. Now, I also recommend in my trading view, so these two trade I got stop out. I recommend people to take euro yen short, and this trade actually was not bad. If anybody who followed it took it, that's the euro yen trade. And as you can see, it's a flat market, but it will fill you in, and basically you will be in slight profit at the moment. Now what's going to happen, of course I don't know this week how it's going to happen, but it will not be a bad trade, certainly better than euro dollar. Okay, and I also recommend personally putting two more trade, which is euro New Zealand and Aussie New Zealand. Now none of them got filled. So Euro New Zealand and Aussie New Zealand I put in right after the last catalyst for Australian. So remember I said I never want to put anything when there is a big tier 1 data point. So after Wednesday, all the Australian data had come out. The last one is retail, right? So I feel like the Australian dollar went from a strong currency because of a negative GDP, a negative retail sales, and negative trade balance. And on top of that, I just feel like all these things really tank Australian dollar down to the point. So that makes me feel like okay, I do want to short Australian dollar, but which one I want to put? I don't want to buy Japanese yen. As I don't want to, because we might end the week with a very strong sentiment, which we have because of the U.S. non-farm payroll. So I decide to use Aussie New Zealand short because New Zealand dollar, first of all, after Wednesday, there was no more risk fundamental catalyst coming out from New Zealand, which makes it easier, safer to trade. So I decided to buy New Zealand dollar against Australian dollar. That's what I did as a pending short. I also decided to buy New Zealand dollar against Euro dollar, also as a pending short. And I took this one right after the Euro dollar got stop out. Now I put this Euro New Zealand short instead of Euro Yen short just because I really like how strong the New Zealand dollar is. And for me, that I look at the chart, I feel like Euro Yen short will be good, especially when we were heading into last weekend. But personally, I just feel like Euro New Zealand might wrap up quicker. Again, you can choose one of them. Now, I wouldn't suggest you take both because then your Euro position will be too big. Okay, so that's my current two pending short that I'm still in, and they are still react as a very strong New Zealand dollar, a very weak Australian dollar, a very weak Euro dollar at the moment. All right, so this week, let's quickly go over this week. So this week, obviously, we don't have that much fundamental data like last week, but that doesn't mean we wouldn't have much reaction, because the biggest news, just right on top of all these headlines, the biggest news this week will be aside from the FOMC Federal Reserve Fund rate, the biggest news will be Thursday, the UK election. Okay, so don't forget, Thursday going to have a UK election, which was deciding that who is going to be the Prime Minister for UK. Why is that important? Because it's a completely opposite party, which will affect the outcome of Brexit. If Boris Johnson got elected, then we will expect, if he gets elected in a majority parliament, we will expect Brexit to be realized by next year, January. So that means the past 3 years up and down finally comes to the end. UK will really officially leave the European zone, the European nations. However, if Boris Johnson does not win a majority vote, then it's up in the air. Or vice versa, if Jeremy Corbyn wins, that will completely change the outcome of Brexit. UK might actually stay in the Eurozone. So it's really depending on the outcome, the seat that each party have. So, but basically, it's going to be a very big event for British pound. It's gonna rattle the market. All right, so let me just go over here. So Sunday we don't have anything. Today we only have RBA government speaks, not a big event. We do have a CPI data from China. Now this will affect the global market. Obviously, anything to do with Chinese nowadays will affect the global sentiment. If you have a very strong Chinese market, means a very strong global market, and vice versa. Tuesday, we don't really have much events. We do have a GDP from UK, but as I mentioned, market is not paying attention to the UK's fundamental data at this point. We have to see what happened to the Thursday's election. Wednesday, we will have CPI in the morning, but it's not that important because you have the FOMC meeting in the afternoon. So this will be much more important as to see whether Federal Reserve is looking to maintain the interest rate, to cut interest rate, or maybe surprise the market to raise interest rate next year in 2020, and then followed by the press conference. Whenever you have this kind of events, I will never trade ahead of it. I will actually not trading the statement as well. I will wait after the press conference. This is where the fireworks will happen, at the press conference. Okay, so stay tuned. If you have never experienced this kind of events, you can watch it online. It's free. It's live, free in YouTube. In a just type FOMC press conference on YouTube or even Twitter. They will all broadcast it live. Then you can, and then if you have a chart, what you can do is you can open a euro dollar chart on one window and then look at the live conference on the other window. Then you'll see how this thing will actually affect the currency so much in such a short-term time frame. It's just excuse me. It's just a fun thing to do if you haven't. If you don't really know how the fundamental data affect the currency market. Okay, guys, I know a lot of people like to trade technically. Now, I love technical analysis, but if you want to know what exactly is moving the market, it's really this kind of events. Now, Thursday, as I mentioned, big events for the British Parliament. With that, this will definitely affect what happened to the British pound. And then followed by the monetary policy from euro. This will also be very interesting for euro dollar. And then finally we wrap up with another US dollar data. So I'll say the major events will be the Wednesday and Thursday. So Wednesday and Thursday will be the strongest events. That means I probably won't put any trade this week unless it's after all these events. But again, if you're interested to have a more updated market analysis, feel free to go to the trading view. You can go to my profile, which is trading view. Just search me, Enho Ko, you'll find me, and take a look at my idea. Feel free to ask me any questions there. I'll be very promptly to answer your question. Other than that, what's gonna happen, I really don't know, so I wouldn't have any too much analysis. Now, the census is that if for the FOMC meeting, obviously, if they decide to cut interest rate, it's going to be very good for the US equity. Might not be that good for the US dollar. But again, currencies always trade in pairs, so you have to compare what happened to other central banks. In terms of UK election, obviously, if the Boris Johnson wins the majority, that's, it's very hard to say, because on the other hand, you have a reason for British pound to go up if he wins the election. But on the other hand, that means UK is really going to leave the euro. The Brexit is not just talking, it's going to be real. Then how is that going to affect the UK business? So that might be something negative for the British pound. If the Jeremy Corbyn's party wins the majority, that means, okay, UK is probably not going to leave the Eurozone, which is positive for the British pound. But on the other hand, it's a very left-leaning party. So it's a party that is not business-friendly. So does that mean it's probably not going to be good for the business environment in UK, and that means the British pound might go down. So you see, you have both possibility coming out from both parties. So that's why I don't want to guess. I don't want to analyze on these things. I'm not a political correspondent for these kind of things. I rather let the market and the events tell me afterwards. Then I place my trade. I have a much better chance to catch the right direction. Okay. All right, guys. I hope this thing has been useful to you. Now, I understand that a lot of people who trade currency market, first of all, a lot of people who trade market only trade technical. And especially for Forex trading, it's a 90% technical trader. I start with technical trading myself. Right now, I still do. That's why you can still see I have a lot of charting software here. But I really think the fundamental knowledge that I started learning back in 2016 completely changed my game. And that's really the way I love to trade nowadays. Especially if you're a swing trader, you will really feel that you have much more control in your trade, because you're not trading blindly, just follow the chart. You actually know what's driving the market. If you are a day trader, yes, maybe the fundamental news will not be that much important. It will still affect you, but maybe all you need to do is to avoid trading at those times. But if you're a swing trader, if you have a bigger position, a longer time frame, I would strongly suggest you to have a little bit more of fundamental knowledge. It will definitely help you to have a better judgment in terms of placing your swing trade, and you really understand what's driving the market. So homework for you this week, if you don't know anything about trading, or if you start trying the fundamental ones, take this chance. Wednesday, go to FOMC meeting press conference. It's free. Pull up a euro-dollar chart and see how the conference, the fundamental data will affect the currency market. And even better, Thursday, well, if you are early riser, at 4:30, 4 o'clock, basically the London time, take a look at the election outcome or the progress, and pull up a chart, a British pound, a cable, British pound and US dollar, and that will really affect the currency market. That will be the most exciting moment. I definitely will not trade, but it will be very exciting because you'll see the pound goes up and down, and all depend on the news. Okay, so again, I hope this video helped you guys, and if you have any question, feel free to let me know. All right, thanks for watching, guys. I will see you soon. Bye bye.